Hello everyone. Today we are going to talk about trade discount and cash discount. These are the two kind of discounts that are allowed while purchasing or selling something. So first we'll try to understand what is trade discount. When goods are purchased in large quantity, wholesalers, either you have to, if you are a wholesaler and if you're selling, you allow discount, or if you're purchasing, you are given a discount. Here, how do they give a discount? How do some wholesalers manage to give discount? Wholesale merchants would have purchased, this is how it works. These wholesale merchants who are ready to give you goods at a lesser price, would have purchased these items from manufacturers, would have purchased these items from someone else for a much lesser price that they are offering you. So that is the reason why they are allowed to, or they are able to sell the items further at a very discounted rate. This is how trade works. First there is the people who are making it, manufacturers, they'll sell it to wholesalers at a price. Wholesaler will fix a profit margin and sell it to retailers. Retailer will fix their profit margin and sell it to final consumers. So here wholesaler is able to, we are talking about wholesaler to retailer, not manufacturer to wholesaler. Wholesaler to retailer is where trade discount usually takes place. Usually it is a retail trade. This trade discount is a retail trade. So how does this work? We'll try understanding it with the help of example. What is reduced here, guys? Unit price. They are able to reduce the unit price here. So for example, from a wholesaler you are purchasing 50 pieces. You're going to his shop and telling him that you need 50 pieces of something, right? So he is telling you, so he is quoting the price of 100 each. He is quoting the price of 100. So he's like, fine, buy 50 items and it is rupees 100 each, so it is 5,000. Now he is giving you an offer, you are ready to pay 5,000, but he's like, just wait, you will anyway sell these items, so instead of 50, why don't you buy, he's asking you, why don't you buy 100 pieces? Actual rate of 100 pieces is how much? So you're thinking, oh my god, it is 10,000 rupees, I cannot afford 10,000 right now. Then he tells you, no, 100 pieces if you're getting from me, if you're getting 100 pieces for me, I will reduce, for each unit I will reduce the price as how much? 70. Each unit I will reduce the price as 70, and ultimately you have to pay only 7,000. So where 5,000 when you are spending, you were getting only 50 pieces. If you are ready to spend another 2,000, how is he enticing you? He is telling you that if you are ready to pay another 2,000, you will get 100 pieces. You will get double the amount, right? You will get double the amount. This is how trade discount works. The value of this item is written only after reduction of trade discount. So suppose if your value of the item written, matlab, if you are recording it in a book, if you are recording things in your book, or when you are recording, when you are writing journal entries, it will be written only after reduction of this amount. This discount, that is trade discount, is never recorded in the books. Trade discount is never recorded in the books. Like for example, we'll further understand this with the help of same example. Gross value would be how much? Actually for 100 pieces you had to pay 100. So it would have been 10,000. But after trade discount, if at all, if you're buying or going after the wholesaler's words and getting this discount, it would just be 100 into 70 rupees each, and you're getting 100 pieces for 7,000. So what is that 3,000 difference? The 3,000 is your trade discount. The 3,000 is your trade discount that happens between wholesaler and retailer alone. Hence, you as a wholesaler or retailer, if you are purchasing the item, what is the value you will record it? You will not record this 3,000 anywhere. How much will you record it at? It will be purchases, sorry, right? It will be purchases account debtor to cash or bank, however you are paying. If you are purchasing the item, you will always record it at 7,000 at the value after trade discount. Always remember this. This 3,000 you are not going to show anywhere. This 3,000 is as good as gone. You will not show this anywhere. You will record it only at what rate? After trade discount rate, being goods purchased after applying trade discount. Now suppose if you're selling goods, what is the value then it should come? That is cash or bank account. You're receiving cash when you're selling. To sales, what is the amount again? It will only be 7,000 and not 10,000. This is trade discount. Now tell me, why would people do that? Why are we not even recording? Why trade discount? If you're purchasing goods, guys, if you're purchasing goods, trade discount is a great thing for you. Why? Because you are a retailer, you bought it at a less unit price. Your unit price, instead of 100, it was only 70. Now, even if you're selling this 100, even if you're selling this one item at a profit of, suppose you're again trying to sell these items, these 100 items also, even if you're trying to sell it at 75 or 80 or even 85, what is it? It is still a profit for you. You can still earn. That is how your profit margin comes into picture. That's how your profit. This is how retailers are earning profit. This is how retailers are, when you're going to a shop and buying something, if they are allowing you a discount, this is how you are getting a discount, right? This is how they are increasing their profit margin for a purchaser. Fine, he is getting profit margin, good thing. Then how is it good for the person who's selling? Why are you being offered a discount? Why is he offering you a discount? Because this guy will purchase, whoever is purchasing will purchase in large quantity. Number of items that you're selling is more. Number of items that you are able to sell off is more. And if the purchasers know you are a wholesaler who is dealing like you, there are many wholesalers who are dealing in the same business. Suppose you are giving, what can I tell you, rice, or usually for normal items it does not happen, while for any item, any cloth item, any cotton yarn item, whatever you're selling. So suppose people come to know, all the retailers come to know that if we go to that shop, he is giving you so and so discount per piece, he's giving you some discount, then again you attract customers. Usually the straight discount is given to regular customers of the shop. Now coming to cash discount. So again, trade discount, just remember, always discount it and never write the value. Or after discount, whatever value you have, only that value you will record in books and treat it as normal purchases or sale. Now next one is cash discount. When is cash discount given? Unlike trade discount, cash discount is offered when the payment is extremely prompt. Prompt matlab before due date. For example, A owes money to B. A owes 10,000 rupees to B. And the date of payment what they have agreed on is 21st of November. The date of payment they have agreed on is 21st November. But A makes the payment on 14th itself. A had money and so he's just making the payment on 14th itself, right? Then B, I mean, it depends on the policies, but B, if B gives a discount, because B is extremely happy that he has paid before due date, if he is making a discount or if he is giving, then what happens? Then he will give you a discount of maybe how much ever he feels like, 5%, 10%, whatever. But still, A need not pay. Now he went to the shop thinking he has to pay 10,000, but B is offering him a discount of let's say 5% So how much? It is 500 rupee less. 500 rupee less only you have to pay. 500 rupee less only you have to pay. You have to pay only 9,500. You have saved 500 rupees of yours. That is cash discount. So what is the nature of cash discount? Let's understand what is the nature of cash discount. You have to pass. Now for writing journal entries, cash discount is always taken into consideration. You have to record cash discount. How is it recorded? Cash discount is an income. If you are a purchaser, if you are purchasing goods, it is an income for you like this. A had to give money to B, 10,000. And instead of B is giving, B is telling, no need to pay me 10,000, just pay me 9,500. That's more than enough. So this 500 rupee is what for you? It is an income for you. This 500 rupee is nothing but an income for you. Now suppose this 500 rupees, this is from A's point of view. This is from A's point of view, alright? Now suppose the same thing you're doing. Now B is the selling firm. B is the selling firm or person who has sold you. Now from B's point of view, what is this guys? This 500. This 500 from B's point of view is an expense. He was supposed to get 10,000 but he is letting go of that 500. He is letting go of that 500. Why is he doing that? Why is the seller letting go? Why is it an expense? Why is he incurring extra expense? Why? Because if people come to know that, oh, if I'm paying on time, I don't have to pay the full amount, it will encourage the other people to pay more, like before time. It will encourage the other debtors to pay on time or even before time. All right. So that way he can ensure that, all debtors will pay up fast. All of them are going to pay up really fast, and he'll always have good cash in his hand, good cash balance or bank balance in his hand to meet his other expenses, right? Now, how is it income? Obviously, for purchasing firm, it is definitely a good thing. Whatever he was supposed to pay, if he's making prompt payment, the seller is happy, the selling firm is happy, and he's given a discount or given some extra cash. This income is something extra. We were not expecting this. We did not know that, yeah, I was going to save this 500. I did not know that I was going to save this 500. So this came as a surprise to me. So that is an income for me. Now, how do you, when you are receiving for purchasing firm, what is it? You are receiving a cash discount. Purchasing firms receive cash discounts. So how do we pass the entry? Creditors account debtor to discount received. To discount received. It will be to discount received because the discount received is an income for the purchasing firm. Now, if you are allowing discount, what happens when you are allowing discount? That is, if you're selling something, it will be discount allowed to debtor. It is an expense for you. This becomes an expense for you here. Expense is a nominal account, and nominal account says debit all expenses and losses, right? So discount allowed account debtor to debtor's account, being cash discount allowed. Now let's just with the help of an example, let's just try and understand this better. X sells goods at 1 lakh at trade discount of 20% and allows 5% as cash discount for on the spot payment. On the spot payment, he's like, if you are ready to pay me the amount now, then I will give you a discount. That is what X is saying. So what is the gross sales value? 1 lakh. 1 lakh is the gross sales value, it is given in the question. Now less trade discount. Whenever there is trade discount and cash discount, you will always use trade discount first. You always have to calculate trade discount first and then cash discount. Trade discount at 20% is 20,000. So the net sale value will be 80,000. Your net sale value is 80,000 less cash discount. Now this cash discount will not be calculated on 1 lakh. As far as we are concerned right now, there is no 1 lakh. 1 lakh is done and dusted. It's gone. Now the new sales value is 80,000. The new sales value is whatever is the sales value after trade discount. On 80,000, you calculate 5%. On 80,000, you calculate 5%, you get 4,000. Now this will be your net amount received. You're selling, this is in the books of X. If you're making, this will be your whatever amount you're going to receive, 1 lakh worth of goods. And what is the cash payment? Ultimately you're getting 76,000. But why are you getting it? Because they are making, whoever is purchasing, they are making on the spot payment. On the spot payment, that is your condition. You're like, I will give you very good discount if you're ready to pay now, right now. So how will you record it in the books of X? How will you record it? Cash or bank account, it is 76,000. You are actually receiving only 76,000 on the spot in the way of cash, check, whatever. So 76,000. Sale, actual sale value is how much? 80,000. Actual sale value is 80,000. So what is your discount allowed? What is your discount allowed? It will not be 20,000. You will not record 20,000 anywhere. Your discount allowed will be 4,000. Now again, your debit side equals to your credit side. That's how it goes, right? And what is the narration? Being sold goods at 20% of trade discount and 5% of cash discount. You can always write trade discount, whatever the transaction you have done in your narration. While you're writing narration, you can do that. But when you're passing a journal entry, the entry debit credit, trade discount has no place in here. I hope that's done. You have understood this. Thank you.